Hey everyone, we got some strong news for Ford stock investors as February sales numbers came in really strong. So in this video, I'm going to discuss those latest numbers for Ford, look at its outlook for 2024, compare it with its valuation, and really give investors some insight into Ford stock right here today. So let's jump right in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so for total vehicle sales in February 2024, Ford sold 174,192 units. That was up an impressive 10.5% from the same month last year. Notably, electric vehicles increased by 81% year over year. Ford sold 6,368 EVs compared to 3,523 EVs in the same month last year. Although if you compare EVs to overall sales, you can see it's still a small fraction, just 6,000 out of 174,000 total vehicle sales were EV. And we're going to see management talk a little bit more about EV demand when I show you their outlook for 2024. Notably, the Mustang Mach-EV increased by 64.3% to 2,930, and the F-150 Lightning EV version increased by 93% year over year. Of course, earlier in the year, Ford noted that it's going to decrease production of the F-150 because demand is not growing as quickly as it anticipated when it gave those robust outlook in 2023 for 2024. Still, total vehicle sales up 10.5% for the month of February. Year to date, total vehicle sales are up by 7.5% for Ford. That's robust growth for a company like Ford that's already mature. What you're seeing here is as supply chains have eased, Ford's ability to create more of its popular internal combustion models have fueled sales growth. You can see the vast majority of its sales are internal combustion, 155,000 out of 174, and for the year, 292,000 out of the 326,000. So if consumers have a choice, more than 9 out of 10 are choosing the internal combustion model. A relatively small percent, roughly 3%, are choosing the EV model. So you can kind of get an idea of where consumer demand is for EVs versus internal combustion when supply now has normalized. You have enough supply of everything right now. You have enough supply of internal combustion and you have more than enough supply of EVs, right? We've been reading about how there's too much EV supply in inventories around dealerships, and dealerships are complaining they have too much EV and they want less supply of EVs from manufacturers. So there's enough supply. It's up to customers to choose what they want. And what customers want, more than 9 out of 10 times, is an internal combustion model. And we're going to see a little bit more of that discussion from Ford here. So the outlook for Ford for 2024 is robust. They're saying that they're looking at adjusted operating income, EBIT, earnings before interest and tax, which is another word for operating income, of between 10 billion and 12 billion. So $11 billion at the midpoint of operating income expected for Ford, with adjusted free cash flow of about 6.5 billion. And that's after they're going to spend about 8 to 9.5 billion on capital expense in the transition to electric vehicles. Now, that's robust billions and billions of dollars of profitability and billions of dollars in free cash flow. It surprises me that investors with this option to invest in Ford are preferring to pay way higher prices to invest in EV exclusive newer startups that are trading at so much more expensive valuations, and they're losing, most of them other than Tesla are losing billions of dollars on the bottom line instead of generating billions and dollars of profitability. It's been one of those situations that's surprised me in investments in the stock markets over the last couple of years is investors' willingness, even preference, to go for these companies that are losing billions of dollars on the bottom line, trading at more expensive valuations, instead of going with the company like Ford if they wanted to invest in the growth in EVs, because Ford is growing in EVs, right? At this current pace, Ford is going to produce and sell more EVs than Rivian, right? Rivian is estimating to sell or produce 57,000 units, and at Ford's February pace, it's going to eclipse 72,000 units in EVs for 2024. Now that's just, extending out its sales pace, but still, Ford has a robust EV sales channel. And for 2023, revenue was up 11% for Ford to $176 billion. Operating cash flow of $15 billion for 2023 and adjusted free cash flow of $7 billion, much better than what the company was looking for at $5.25 billion. So here's the comments that I promised you about electric vehicles. So Ford's saying that EVs are here to stay. Customer adoption is growing and long-term upside is crucial for Ford's business. However, and this is a big however, with mainstream customer adoption of EVs happening at a slower rate than the industry expected, Ford said months ago that it's deferring capital investments in EVs until they're justified by demand and prospects for acceptable returns. That's a big however. Customer adoption of EVs is happening at a slower rate than industry anticipated. And I would add an adjective there, at a much slower rate than the industry anticipated. People in the industry were thinking that the rate of growth and the rate of adoption was going to be something like 2 to 4 times faster than it's been. Companies like Lucid and Rivian and Tesla and Fisker and others have invested billions of dollars with the hopes to fulfill that growing EV demand, but it feels like, and it seems like, and the market is telling us that there's too much supply of EVs. Companies over anticipated what was going to be demanded from consumers, and now there's too much capacity. Ford is saying there's too much capacity, we're going to defer capital investment. Lucid is saying that supply is not the problem. We have enough supply, we just don't have customer demand. Rivian saying that they're not going to increase production in 2024 from 2023 because they don't have people to buy them. They don't want to produce more than people will buy. Tesla, when asked about its expansion plans, said, we're going to be smart about it. We're not going to invest in expansion when customer demand is not there for expansion right now. And of course, Tesla gave its myriad of reasons why that's the case. Now, if you look at Ford stock over the last 3 years, it's gone nowhere. Yeah, I mean, it's traveled, but it's gone nowhere. It was roughly $12 per share in early 2021, and it's roughly $12 per share now. So investors, of course, they've gotten their dividend yield from Ford stock, but there hasn't been any capital appreciation here. And if you compare Ford on a forward price to sales ratio, what I have here is Ford in the purple and Tesla, Rivian, and Lucid in other colors. Ford is trading at a fraction of the valuation of these other EV companies. 0.28 for Ford, 1.3, so 6 times more expensive is Rivian. Lucid is more than 10 times as expensive at 3.3, and Tesla even more expensive at a forward price to sales of 4.286. Now, Tesla, I can understand it's profitable. It's generating billions in cash flow as well. But Rivian and Lucid are burning through billions of dollars, losing money, with no hopes of profitability anytime in the near term. Not anytime in the next 2 to 4 years are Rivian or Lucid going to be profitable. And I mentioned already, Lucid expected to only slightly increase production this year, and Rivian is not increasing production at all. So there's zero growth for Rivian and essentially zero growth for Lucid as well, where Ford is actually growing, right? The old company Ford, I showed you revenue increased 11% to 176 billion, and that's with 15 billion in cash flow, right? Versus those companies that are burning through billions of dollars and not growing. So I keep raising that question. Why would investors want to pay that much more money for those excuse me, EV companies, when if you want to invest in the growth of EVs, you can do so through a company like Ford? Now, I don't like car companies. I don't recommend very many investments in car companies because of this problem. It's a cyclical industry, it's a competitive industry, very capital intensive, and although right now Ford is going through good times, when the economy slows down, Ford could face tough times as well. There's overcapacity in the system, too much supply. So still, if I wanted to invest in a car company, instead of going with any of those Tesla, Rivian, or Lucid, I would much rather prefer going at it through Ford stock. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.